Welcome back to Midcap Masala right here on ET Now, and we are in the thick of the earnings. And the next company we're going to be talking to is Mahindra Holidays. And for that, now we are being joined by the MD and CEO of Mahindra Holidays and Resort India Limited, Mr. Manoj Bhat. Hi Manoj, good to be speaking with you. Actually, still getting used to speaking to you only about Mahindra Holidays versus the rest of Mahindra earlier. But nevertheless, let's talk numbers for Mahindra Holidays then. And let's start by talking about the hike in the hotel rooms. The guidance that you have given is 10,000 earlier to now 12,000 keys now by FY30. What drives this confidence? Help us understand that.
So always a pleasure to be back. I think from our perspective, as just a quick recap, we had said that the Club M brand, the Club Mahindra brand, which is going to be rebranded as Club M, will have 10,000 keys. And then we said that there'll be a new brand called Mahindra Signature Resorts, which will add another 2,000 rooms. So if I look at first the Club M part piece of it, I think again this quarter we have added 273 rooms. I do feel that in this financial year, we will end up adding at the gross level about 1,000 rooms. And that's going to be a kind of new high number. In addition, we have a very good funnel out of the balance. We have a funnel of almost 3,500 rooms, or as where we have actually tied up with people to take over those rooms over a period of time. And some of them are going to coming in the next year. Some of them are being built according to our specs. So from that perspective, the 10,000 room number, I think we feel that we are in a good place in terms of achieving those numbers. Clearly, I think we have to keep monitoring the execution on those. And that's something we are doing very well. On the other brand, I think, as I had mentioned, Mahindra Signature Resorts will be coming in FY27 towards the end of that, and then we will build from there. So that is going to be also a bit back-ended in terms of first we will build out a couple of resorts, build the brand, and then actually expand more towards the end of the 5-year period, which we have talked about.
Right. Mr. Bhatt, if I could just ask you for a clarification, this 1,000 room addition that you just spoke about, is it for FY27 or is that the total number for this financial year?
So this financial year, we will add gross 1,000 rooms. That's what I had said in the past, and I think we are on track for that. We are also exiting some rooms where we feel that they are not in line with the quality of rooms which we would like in our network. And so the net number will be a lower number, but the gross additions is a measure of how we are thinking about room additions. And then, so that's the number I was quoting for F26, the gross additions.
Okay. And Mr. Bhatt, thanks for that clarification. Let's talk about your financials. Quarter 3, we've seen a very sharp fall coming in the PAT. Now, I understand a part of it had to do with the labor code impact. That's a one-time hit on the business. But if you could help us understand what was the reason behind such a sharp fall in the profitability?
So I think we have to talk about it in two terms. So first, let me talk about the India standalone business. So if you actually look at it, as you mentioned correctly, we took a hit of about 11 crores on account of the labor code. And if I adjust out for that, actually the profit the adjusted profit, it's a growth of almost 17% year on year. So which is a pretty decent number in terms of profit growth. Now, if I move to the consolidated numbers, that also includes our European operations. Our European operations have been a drag this quarter, and because there were certain weather changes in Finland, which delayed the start of the ski season and so on and so forth. And as you know, we have about 25 locations in Finland, including quite a lot of ski resorts and where people do snow sports as well as cross country skiing and so on and so forth. So I think we saw some of impact coming there. Now, of course, Jan has bounced back and Jan is back to normal in terms of the weather, but we did see a loss of revenue in our Finnish business, which actually skewed their results downwards, and that's what you're seeing on the consolidated level. In addition, there was a forex of about 6 crore hit because of the euro movement, which happened during the quarter. I think so. The standalone, I would repeat, is a 17% growth and an adjusted basis when you adjust for the one time. And the consolidated, I think, has been impacted by forex of 6 crores, as well as potentially some slower profits in our Finnish business.
All right, but along with that, Mr. Bhat, now membership additions did fell 50% on a YOY basis. What drove this slowdown, and by when can we expect a recovery there?
So I think I've said in the past also that I think our metric is not member addition. I think it is about making sure that member experience is much better. And as part of that, we have actually moved out of several locations from a sales perspective. And this, a lot of it has happened over the last probably 3 to 4 quarters, maybe even 5 quarters. And as part of that, I think we are focused on actually getting members of a certain profile. And the other side of it is that if you look at our AUR, or average unit realization, or average sales value, that's up at 9.7 lakhs, which is up 58% year on year. So I think it's a combination of how do we look at the profile of members who can actually enjoy our resorts, and also premiumizing the product overall. As part of that, of course, I should talk about Keystone, which is our new membership plan. Again, that is priced at a premium over the previous membership plans we had. And we only at mid-December, so early days yet, but early days, I think we are seeing very good response on that. So that's also in the future going to help us as we think about overall sales value. And I'll repeat again, I don't think we are focusing on member addition as a major metric. We are thinking overall sales value.
Okay, got your point, Mr. Bhat. Lastly, talk to us about the announcement that came in the middle of Q3, the foray into the luxury leisure hospitality business with Mahindra Signature Resorts. Talk to us about the rationale behind this foray and what kind of response are you seeing here?
So what we said was, if you look at the Indian luxury market or the Indian branded hospitality market, only 8% is a vacation ownership share of the pool. 92% is what I would call conventional hospitality and not based on membership. And as we looked at that, and we said that while we have 85% market share in the VO market, we are the dominant player. I think we have a negligible presence in the broader market. So as part of that, I think we said we should actually look at that business very carefully. And we felt that there should be another brand which also helps us position there. And from a positioning perspective, we said three things, that this brand is going to focus on really family and tribe. That is what we are well known for. We know how Indian families holiday. We know what features to be put in.
Sure.
We also said that it will have a sense of place and local. And that's the brand. And now the first resort is going to come probably in F27 late, as I mentioned.
All right.
Then we'll build the brand from there.
All right, and we look forward and wish you all the best. With this, Manoj, we let you go. So good having you on the channel today. Thank you so much for joining.
Thank you for having me. Thank you for that.
All right, but with this, viewers, we are completely timed out. And this edition of Mid Cap Masala, it's a goodbye from me and Snehi and the entire team who put the show together. Thank you so much for tuning in.